In your markets news, Asian markets rose for a second straight consecutive day. Although the big Chinese market, the Shanghai Composite Index, was closed on account of a public holiday in that country, some people are attributing this to President Donald Trump being released from hospital, despite the fact, to quote his doctor, that he's still not out of the woods yet. Gold prices maintained well above the $1,900 an ounce level, even though they lost a little bit of ground during the session, while the oil price ticked up slightly. Over in Japan, the Nikkei share average ended up 0.52%, while in Hong Kong, the Hang Seng Index closed up 0.9%. And as I've mentioned, Chinese markets were shut due to a national holiday. Over in the United States, stocks rose sharply on Monday, recovering from declines in the previous session as investors viewed more fiscal stimulus as likely and after news that President Donald Trump would be discharged from hospital where he was being treated for coronavirus. Shares of Regeneron Pharmaceuticals Inc. jumped after Trump's physician said he'd been treated with Regeneron's dual antibody treatment. The Dow Jones Industrial Average rose by 1.66% to close at 28,143 index points. The S&P 500 gained 1.77% to close at 3,408 index points, while the tech-heavy Nasdaq Composite added 2.3% to close at 11,330 index points. Let's take a look at the indicators. Well, for more on the markets, I'm joined via Skype by Chantel Marks. She's from F&B Wealth and Investments. Thank you so much for joining us, Chantel. Are markets more concerned about Mr. Trump's health condition, or there's more focus on the possible sealing of another fiscal stimulus package? And do you think it can still happen so close to the US presidential election in early November?
So I think markets are quite concerned about absolutely everything, and that is why you are seeing a lot of volatility both locally and abroad. I think the initial reaction to Mr. Trump's health was quite negative on the markets, but you would have seen markets being kind of topsy-turvy after that. And I think a lot of that has to do with the fact that more will still need to happen in order to prop up some of the economies, and particularly the US as well as Europe, that are actually battling to keep COVID-19 under control.
So why do markets tend to prefer a Republican candidate anyway? I mean, when President Obama was coming towards his term or the end of his term, markets were flying and he was doing quite nicely. Thank you very much.
Yeah, it's a very strange thing, because in reality, Democratic presidents are actually better for the markets than Republican presidents, or at least post-World War I, they have been better for markets. So this is actually just a sentiment story, and it's very much made up in the heads of market participants, because in reality, this is not what happens. But the theory behind it is that Republican presidents tend to be more business friendly. The Republican Party generally favors a very loose tax environment, whereas Democrats are very kind of pro income, spreading income across a nation, which would mean that you'll have a progressive tax system. So you'll tax the rich and you'll tax businesses in order to give to the poor. So that is basically the theory of it. But as I mentioned, on the ground, that isn't really what happens.
Yeah, and it's quite ironic that you say that, because when we have crises like the global financial crisis and even this coronavirus crisis, it's private business that looks to government to actually bail them out so that they can continue to be viable going forward.
Yes, absolutely. So it's all very strange. But what has happened over the last few presidential elections, particularly when it's highly contested or when there's an expectation that the president will change, because it does feel to me like it's Democrats, Republicans, everyone gets two turns. But what tends to happen is you have a crisis almost leading up to it, and that creates an artificially low base as well for markets. But yeah, there are a lot of funny stuff going on around US presidential elections, but ultimately what drives markets are the fundamentals, and it'll eventually go back to that.
Speaking of fundamentals, I do see that the oil price has managed to tick up a bit, and this on the eve of us here in South Africa getting lower fuel prices. But how do you see the fundamentals of the oil market? Is the global market still oversupplied?
Yes, I think for now we are still in an oversupply situation. And while economic activity remains under par, you'll probably see this undersupply situation persist. It will change eventually, though. I think that we won't get the sort of supply issues that we've had in the past. But I mean, who knows? A lot of this stuff is geopolitics related. A lot of oil comes from the Middle East, where we know there's a lot of unrest from time to time. So depending on how the situation plays out, how it normalizes, and then stuff like sentiment could have a big impact. But if you only look at the oil price fundamentals, we're still in oversupply, but we still expect the oil price to make a bit of a comeback from these levels.
Of course, one particular stock in South Africa that's heavily correlated to the oil price is Sasol. And we do see that the Sasol share price has lost quite a bit of steam in recent sessions. Is this a negative reaction to the company announcing that it's selling part of its Lake Charles chemical project in the United States at a seemingly bargain basement price of $2 billion?
So I think the $2 billion price tag really isn't the main issue, because that was kind of floated about in the media prior to the announcement actually being made. They're also not selling the entire complex. I think the concern here is that they're still not willing to take the probability of a rights offer off the table. So they still think that they're going to have to come to shareholders and ask for money in order to improve their financial situation. And that has really spooked investors, and I think that a lot of investors are actually now assessing the risks to Sasol as being to the downside, instead of a few months back when they were clearly assessing it to the downside.
And just looking at our economic fundamentals here in South Africa, obviously we've had a really tough time, what with the impacts of COVID-19. The economy was not doing well even before COVID hit our shores. And we're expecting that economic recovery plan to be announced by the president anytime soon. How desperately do you think we need it?
No, we absolutely require a very direct and well thought out economic recovery plan, because if we progress on the path that we're progressing now, we will see economic growth in terminal decline. We will see our fiscus deteriorate even further, and that is a situation that I don't even want to think about, and I don't think any South African wants to think about a situation like that. So we urgently need it, and I think what we need even more is a social compact around what is required to get ourselves out of this economic hole that we've dug ourselves in. So I think the first step would be for business and labor and government to sit around the table and really agree on a way forward. Because if we're going to continue with impasses, if we're going to continue with business being unwilling to invest because the policy environment isn't there for them to invest, labor not coming to the party because they feel that they require more from government and business, it's going to be very difficult for us to grow our way out of the situation.
Chantel, thank you very much for your time and your insights. That was Chantel Marks. She's the head of research at FNB Wealth and Investments.